Hi, my name is Daniel Lipke. I got my training with AgenaTrading. Originally, I'm from the somewhat more fundamental area, where I also received very good education, most recently a Master of Science in Finance, and I also studied in the US for a long time, which is why, of course, I'm very happy that today we have a lot of people watching and listening in the USA. I came to AgenaTrading over a year ago, and of course, I'm really pleased to be here as part of the AgenaTrader Day for the second time. Last time it really was a lot of fun, and I think that we're going to have a great day today too. The markets are really moving, which of course also has fundamental reasons that we can get into more throughout the course of the day. And I'm sure that although it's a little unusual for a lot of momentum to get going in the markets just before Christmas, however, over the last few days we have observed this, and I think we can expect similar momentum today. And I'm especially happy to be able to be here. And just a little bit more about what I do briefly. I'm a trend follower, as many others here probably are too. And I basically trade all asset classes across the board, shares, futures, forex, where I'm a little more aggressive when it comes to short-term trends, which of course is what will be in focus today during live trading. But of course I also trade somewhat larger trends from time to time, especially here at AgenaTrading when it comes to asset management, where we primarily trade larger trend sizes and 90% of that is primarily shares. But here today, of course, it's really all about live trading and action. And for that, of course, we'll go down to the smaller trend sizes. And here, as I said, I trade everything that's liquid, everything where there are a lot of market participants on the go. That's where you can also find me. For example, here I'm sure that all of us, not just our American colleagues, but also us here in Europe, will take a close look at the S&P when the session gets going here at 8:30 a.m. Central Time. And I'm particularly looking forward to today. Many thanks, of course, from us to Gilbert and AgenaTrader for the invitation, and I'm sure that we'll have a fantastic day. Hello everybody, my name is Jörg Schmidt-Schneider. I'm 38 years young and I live in Switzerland. Originally I'm from Germany and live directly at the German-Swiss border. And I got involved with trading initially purely due to personal private interest when I was getting my training with my former boss, who was trading shares. I always found it very exciting to be able to look over his shoulder. And then during the new market, I myself bought shares, where I had some profits and some losses, but I didn't know why they were profits and losses. And then in 2007, I started getting into this topic a bit more intensively, whereby I have to say I'm not a professional trader, which means that I'm a hobby trader. My main career is in real estate, in project development, but this allows me to spend some time on the topic of trading. And, well, I mainly trade in the short-term range, which is also called scalping. And there I'm also a classic trend follower, like many, I think. I trade according to Dow theory, where we also have another representative with us today on the virtual trading floor, Marcus, who kind of took me under his wing and taught me a lot. So thank you very much for that, Marcus. And I trade classically. I try to trade from the movements, the trends, that is from corrections that have formed. I aim to trade the bit up to the last point too, so I try to take that part of the movement along with me. That's the one setup, and the other setup that I trade is ranges. So this is my trading style. I'm very comfortable with this when I have a position running with some movement in it, and with long-term trading, so on an hourly or daily basis, for me I realized that I was continually checking the position on my phone. And so in this way it's very convenient for me to have a position. I trade between 2 or 3 hours a day roughly, which is enough for me. I have fun doing it, and I think that today I'm the representative for many of you out there who spend time trading but are not professional traders, and are instead hobby traders who use training and professional tools to also attempt to represent their right to be here in the markets. And with good education and good tools for this, I have found out, after quite a long time, that it is possible to be successful in the markets as a non-professional. So that's all from me for the moment. I'm very happy to be here, to have the opportunity to take part again for a second time in the round of people. Each time I learn a great deal from my colleagues' presentations, and I'm thoroughly convinced that trading is a job, or let's say an activity with which one can earn money, in which you never stop learning. And I continue to learn more about my activities in trading and keep a critical eye on my notion of trading. And I'm constantly discussing it with friends, colleagues, and really experienced professional traders, really daily, in order to continuously improve. And I definitely assume that everyone who's taking part today has just the same motivation and the same goal for today, to get confirmation and new inspiration for trading. And of course also to really see our professional tool here, AgenaTrader, put properly to the test, and to see how people who use it daily have it set up. Great, that's all for now, Rudiger. I think we might have to do a quick tech check for me. I wasn't able to switch to the other screen, but I'm definitely convinced that today will be very successful by 3:30 p.m. Central Time. So with that, I wish us all a great day, and I will hand back over to you, Rudiger. Jörg, thank you. Next up on my list is a trader who is very dear to me, who I know very well and have known for a very long time, and with whom I've had many very interesting and intensive trading discussions. He's also part of my team, Markus Gabel. He's been with us for a long time. Earlier he was a market technician, and now he's in the markets with his Dow-How approach. I honestly have to say that I'm very positively surprised with his success with this approach. When I first saw this, I thought, wow, because I myself have a different approach. But I have to say that it is not bad at all, this whole approach. But of course, only he can introduce this best. He has the image to go with it, as we'll see in a minute. Markus Gabel, tell us about yourself. We're looking forward to it. Hello everyone, and a big welcome from the depths of Bavaria. I hope you can hear me well. My name is Markus, and I am the Dow trader here, similarly to Jörg Schmidt-Schneider, and we've been working together for a while, and I've also been lucky enough to be using AgenaTrader for several years now. And of course I'm also very happy to be a part of this excellent team. My approach is relatively simple, but I'll get into it a bit more at 11 a.m. Central Time in my somewhat longer introduction. I myself have been trading now for more than 6 or 7 years, and the topic of the stock exchange has been an interest of mine for more than 12 years already. And I think I've also taken the hardest road that one can possibly take. So I taught myself how to trade, and at decisive points, I was lucky enough to receive support from various sources. And today I pass on my knowledge in the form of a training service. And for me, this is one of, or actually the biggest honour, for me to be able to transfer this knowledge in a really terrific asset management group, Born, Stahlberg and Partner. For me, this is the biggest honour I've received so far in my life. And I've also found a very friendly and familiar team here. And of course, it means it's a lot of fun to work on my trading approach together with the customers. So, as you can see, I already have several trades running, but of course I'll talk about them a bit more later. At the moment I have 4 trades running here: Australian dollar, Canadian dollar, New Zealand dollar short, I shorted the S&P 500, and US dollar, Canadian dollar in the long mode. So there are several there in the bigger time frame. And if today I want to trade in the 5 minutes, then I'll obviously make sure that big trend, that is the hourly trend in this case, is also going in my direction. Despite this, of course, as always, it's all just about probabilities. And I entered into this trend this morning already because, as I said, everything was pointing in the short direction. And now here, this has been a very difficult endeavor the whole afternoon. And it seems as if the US stock exchange will now actually be opening a little more negatively. And with this, the whole thing may well go in my direction. Of course, we will see throughout the course of the day that it doesn't always work like that, and some trades have already been stopped out today. But the opening in the US seems to be relatively negative, or at the least a little inconsistent. So for me, it definitely looks as if there won't exactly be huge downwards pressure, otherwise the market would break through directly downwards. But there also don't seem to be that many market buyers at the moment, otherwise we would already be moving further upwards right here. But the first signs of going upwards were immediately sold off again, so my wish, of course, would be for there to be an amazing, a monster short day today, and then everything would go in my direction again, and I would be very happy about that. But yeah, we will see. So that was my first statement for now, and we'll see throughout the course of the day whether this trade works out. Rudiger, back to you. Thanks a lot, Marcus, and thanks for giving us your first input. It looks very exciting and very interesting, very bearish, but obviously it's understandable and not at all unreasonable that the market is going downwards here at the moment. Okay, so I just got feedback from Saul.
So, ich habe eben schon Feedback bekommen von Saul. Saul, are you there? Can you hear me? If yes, you are at the microphone. Please give us your indication for the start.
All right. Yes, I can hear you. Thanks again. Sorry about that. Had a little bit of an issue there with our charts, but we got it all ironed out here. So let me quickly give you our levels here that we're going to be trading off of, and we'll go from there. Our pivot this morning in the S&Ps is 2047. 2047. All right. We have resistance at 50, 40, 55, 61, and 67. And then below, support 44, 36, 26, and 18. And again, like what we try to do is we are trading off of support and resistance. And we did rotate down here to our first support level here right before we, right after the opening. And we did have a little bit of a buy area there. And again, we're looking for about 2 points off of our trades, and we bought them right there at the 44 and a half. We like to sandwich in our orders around our levels. So if our level is 44, we're at 44 and a half to 43 and a half, and then we trade off of that level. As you can see here, we went right up to our 50 level where we would have had a little bit of a sale on that level as well. Of course, since we're trying to catch up here, I wasn't able to put my orders in there, and we're looking for a 2-point rotation off of those areas, and we obviously got that on this move 250 and back down, and then the move to 44 and back up there. Again, because we were having a little bit, just running a little bit late. Those are our first two levels that got triggered. Obviously, when a level gets triggered, we don't like to go and use it again. So the downside support there at 44 is invalid going forward. And next time down there in market, we expect it to probably go through. Again, go through, and our next target down below, it has to get below 43 and a half. No, 43 for us to go look for the 36 level down below. As the market rotates up here, we're looking for our next level up there would be at the 55 level. Right here in this market going back and forth, it is not really doing too much for us, so we don't really do anything. A little bit of a buy back to our support level, back to our pivot at 47 would be our next trade, given market conditions as it is going now. So again, let me repeat the levels. Again, we're the pivot this morning in the S&P is 2047. We have resistance at 50, 55, 61, 67, and support at 44, 36, 26, and 18. We don't figure out the pivot like most of the other, there's no equation to it. Talk to some of the folks on the floor here, to some of the traders that I know in the pit, and they kind of talk to me about what levels are important and what levels they think is going to be the pivot in the morning, and we go from there. So it's not the pivot that I give out is not what most people are kind of used to when they have some mathematical equation to get to it. So again, this is part of the advantage that you get here when you join us, because I do get to talk to some of the folks on the floor, and we do get to relay some of the levels that they're looking for to be able to help us with our trades as well. So that's what we are trying to do. We're coming up here to our resistance up here at the 55 level, and in this, we would probably have a little bit of a short up here if we get up to 54 and a half, and look for, and we also would have another trade at 55 and a half, and then look for a rotation back down about 2 points minimum with a 2-point stop. So our stop would be up at the 57 area. All right, that's what we're doing right now. Again, this is kind of back and forth. We also are concerned about economic numbers that are released during trading hours. Usually, some of the big numbers, like the unemployment number, is released at 7:30. It's right now it's at 8:30 or 8:40 right now. So usually an hour before the market opens, some of the bigger numbers are released. But there are a few numbers that do get released at 8:45 and 9 o'clock. Today, however, there's no big numbers. We are mindful of these economic reports that are released, these fundamental news that are released. So we kind of just focusing on them, make sure they're not going to interfere with our trade, and we usually don't have any positions when that happens. So, all right. So I think there's somebody else has a trade right now, so I'm going to give it back to you, I think.
Thanks a lot for your levels, and thanks a lot for all the information you gave us. We will hook up on this. We will come back to you later. Whenever you have something really interesting, just give me a sign and I let you tell about this.
I just got a notification from Daniel. Daniel, you have a trade. I've heard you'll also translate it. So you'll say it first in German and then in English. So please take it away, Daniel. Right, thanks very much, Rudiger. It's Daniel here. I have a trade running here, which I entered several hours ago. And this trade is actually a great one for making my trading approach clear. At the beginning, I already said that I'm someone who trades all asset classes, where there's basically a lot of volume and a great deal of volatility. And one asset class that I really like to trade is government bonds. And I have two positions running simultaneously in the German government bonds, here the Bund future. And I previously also opened a position with the American government bonds. So why did I make this trade? First, let's take a look at the 1 hour chart. So the Bund future was oriented upwards for a long time. And then last week there was a very, very strong sell-off. Of course, this was due to the ECB, the European Central Bank. The expectations were very high that Mario Draghi would get a little more aggressive with the quantitative easing. And of course, this led to the market participants exiting the Bund, because quantitative easing simply means that Draghi would also buy up German government bonds. And he's a big market participant in the background. But immediately after this, an upwards trend formed again in the Bund future. And I personally always pay attention to not only the really big picture, but also especially what's going on in the hour. And especially with futures, of course, I try to be a little more aggressive in the market. Normally, I also want to be as flat as possible at the end of the day. And So yeah, the upwards trend was decisive for this here. And let's go to the 10 minutes now, on the left here in the picture. Here we can see the entry this morning, the entry in the futures area. When you enter at such short notice, then the chart alone, although it is essential, is not necessarily enough to catch an entry. But instead, what you also have to keep an eye on is the volume and the order book. And with this example, you can see very nicely, okay, we can't show the order book from this morning, but we can see the volume. And where I entered, the volume suddenly increases, and then it went right through the roof. And for me, that was the entry signal. And at the same time, I had the order book in mind. And I saw that the cash side, the overhang from the monetary side, had gone over to the bid side. And this is where the entry came. And up here at the high, more or less, not exactly, but at the high of the previous day, I made the first partial sale. Okay, now how do I manage this trade? You can see here, now two of you may think, wait, why did he drag his stop back? What's going on here? We don't do that in trading. But actually, we do under certain conditions. Since I'm managing this trade here on an hourly basis, namely the movement. And if we're in the candle at the moment here, then the stop can accordingly be set back. I personally don't have to worry about this trade anymore since it's already secured, it's out of the risk, and depending on what the market does today, let's wait and see if it takes this level here, which it did briefly test at 158.96, more or less, 97. If it takes this again, then quite a bit of momentum could get going in the Bund future here in the next few days. And also from a fundamental perspective, I have to say, I prefer to trade the Bund long because it simply remains a safe haven for investors as well as for traders. So if the shares market comes under pressure, which was definitely the case yesterday in the S&P, we saw this very nicely in the early evening, a bit more momentum came back into the bond markets, and this is why I really like trading the Bund long as the safe haven. And as I said, in the background there's a very large participant in the form of the ECB, and of course it also provides supportive buys, because the ECB doesn't only buy from the government bonds that are hit, but from all European countries. This means that it also buys from the Germans. And now a bit in English.
So, for our American folks, welcome. I wanted to show a trade, and what we have here is the German Bund, the German bond. It's a 10-year bond, and it's a very interesting market that I like to trade because there are a lot of market participants who are always trading the bond market, especially the German Bund. And what we had here, I have here the 1 hour time frame. Last week we had a huge down movement in the German Bund because it was a huge disappointment about the ECB. A lot of market participants expected that Mario Draghi would be a little bit more aggressive on the quantitative easing, but he didn't increase the volume of the easing. He only increased the length of the program, so that was a disappointment. But right after, the Bund made another uptrend on the hour chart. We see it here. I'm always looking for trends, and as we can see here, we have higher highs and higher lows. So I'm always looking to get this trend on the 1 hour chart, and today, early in the morning, it was about 3 or 4 hours ago, I got an entry into this one, and the chart here is not enough to get a good entry into the future market because I'm always looking to the volume and also to the order book. And right now I need to manage the trade because I already made a partial exit right here at the top, and I'm looking for that the Bund made another move about the 185.97 because right here there can be much more pressure here, up pressure, maybe around 160. So we will see what's going to happen. And now it's I'm looking forward to get another trade here. Oh yeah, I also wanted to show the 5-year T-note. I forgot that. I already made it. I also made a trade at the 5-year T-note because I'm out of the risk at the German Bund, and that's why I also made a trade here. Well, what can I say? Nothing happened here, so I'm more or less a little bit negative, but I also have an uptrend on the 1-hour chart, and yeah, we will see what's going to happen. If the S&P is going to make another down movement like yesterday, yeah, of course market participants will go into the bond market. All right. So back to Rüdiger.
Okay, thanks for showing us. Danke, dass du uns das gezeigt hast. Sehr schön, wunderbar. Ich würde vorschlagen, wir haben doch noch jemanden drüben übersee. We have another one sitting overseas, and we are really curious what Martin is saying on the situation currently. So Martin, if you can hear us, just let us know what your opinion is after the start. Can you hear me? Can you show us our screen? Now we have your picture, but please turn on your microphone. Yes, yes, now I'm hearing you. It's yours.
Okay, wonderful. Okay, so let me turn off my other speaker. I've got the English room going. So, the first 15 minutes, in my opinion, is a killing field. Obviously, you can take trades. Notice how we had this signal right here, right? Perfect. When we look at this, the way that we trade, and again, the first 15 minutes, whoops. This is actually a signal for us here, and a signal for us here. Just one moment. Getting used to this. Okay. But then I put other filters to, and we got a trade signal here, but this would be a good trade, but I don't trade the first opening 15 minutes. Now here's the signal. Okay. And it looks like we're going down. So we got the signal. This is really confirming. We're getting in a little bit late here, but we would sell this, okay? Getting in a little bit late. And then we like to draw another signal. Okay. So now we got 2 signals that told us to go short. And let's see, I suppose it triggered here. And the actual entry, the best entry would be this one right here. Okay. This guy right here. That would be the best entry. Only because I'm a little conservative. Now, by the way, I'm looking, the range, the chart time frame we're using is the 10 range bar, okay? All right, let me just check something else out. As a general rule, we expect to move every single day in the 10 o'clock hour. I just want you to know that. So if you had to allot yourself just one time to trade, you'd be looking for trades in the 10 o'clock hour. The other thing I do when we trade is we look at correlation. And, you know, I'm telling you, the way that we trade is going to be a lot different than people who are probably trading, watching order flow and watching, you know, just one instrument only. What we notice is that there are linkages and there are correlations. And crude is really calling the shots in equity index futures. It really is. So if crude suddenly starts turning up, we're going to see the equity index futures turn up. This is a very, very strong linkage. You have to understand that. Why did the markets fall yesterday? I saw that someone wrote in the comments. The markets fell yesterday because of crude. Crude turned and all the equity index futures turned. It's that simple. So if you're going to be trading equity index futures, you have to be aware that there are sometimes anchors, and for now it's crude. The idea that this candle cannot do anything on the Russell 2000, which is one of the more volatile day trading instruments, tells me that these traders are too afraid to buy and too afraid to sell, okay? So again, the better times to trade, I think, in the morning, the first hour and a half. We always expect to move at 10 o'clock a.m. That's 10 o'clock the hour. Oh, sometimes that move comes at, now look, the computer gave a signal with that blue bar. This is just something I'm working with the good people at AgenaTrader. So there's the signal from the AgenaTrader program that they're so kind to help me with. I've lost my train of thought. Anyway, trade's certainly going how we thought it would go, right?
It looks really wonderful.
So we take one off at 10, and then we take one off at 20. All right, so basically you see the trade set up. You see that I'm working off the commodity channel index. We just do the diagonal trend line break, and we got the trade entry to go short. Everything's working. The markets are just not showing us the movement we expect, but at least we're in the right direction. Now this trade can take some time, so if another trader finds a trade, you know, they should pipe up here. We could be doing this for quite a while.
Yes, indeed, while your trade is running, just let us jump over to Jörg. He has found a trade. Just let's...
Jörg, you found something. Let us see what you found. Okay, so as I said at the beginning, today I'm sticking to the short-term area, to scalping. And now I just have to react very quickly here. I'll probably be stopped out, but then I'll explain my trades afterwards. The first target has been filled, and okay, we'll simply let the market decide whether I leave with a partial profit or a whole profit today. We have the following situation here. I'm in the 5-minute chart, and there was the alert, it just sounded. I have the 5-minute chart here on the left side. There was the range. This morning we saw that in the Dow Jones. And here we actually had 1535 with a breakout out of the range. In the candle here, this 5-minute candle, if I had just closed it a little bit better, so if I hadn't let it run quite so far upwards, then this here would have been a setup for a breakout out of the range. But I didn't take it. Here we have the extension out of the range, which you can see very clearly. On the one hand up here we have the triple point. The price didn't quite reach the range size 100% here. And following that, I searched for my entry. My goal was for the price to come back to the edge of the breakout, which it also did. And I was managing the trade in the 1-minute chart. So here was my entry. And this was my first target. I was short with 2 contracts. Then I very quickly dragged my stop which was originally up here, behind. Here I waited until the price finally reached my target very clearly, and then I dragged my stop to the entry, and with the second position, this was my trade. I purposefully didn't close one position, so I didn't take the full position at this bar, because the probability was quite high that the price would eventually have another breakout here, because here there is simply, when I look at the whole thing, here we ran into the correction zone, and as I said, my target was down here, and I only closed one position. This was my target. Here you can see my stop was simply too close to the market. The trade would have worked, but I prefer not to make a loss and instead to have a small amount of profit. This is my goal when I'm scalping, and with this I'll sign off, and when I have my next trade I'll notify you. Back to Rudiger. I'm so happy that we have such a great event, and for all of you that are just now joining us, so that you can follow along now, we actually have traders from all over the world. We have traders from America, we have someone sitting in Asia, we have people in Europe, in Germany, in Switzerland. I don't even know if Marcus is in Austria at the moment. No, he said he was in Bavaria before, but he travels around a lot. So you can see that this is a really great, large event. Now, I have to admit, Jörg, I might have taken over from you a little too quickly, but it was a bit difficult to understand technically the audio. So did you have anything else, or are you finished for the moment? Can you forgive me for not understanding everything? No problem, I was basically done. The last execution was, of course, the second position, where I had placed the stop on the entry, and where I had the aim that if the large movement carried on further, then it would be the start of a new big movement. But now we have to observe what it does. For me, at the moment, there's no clear picture in this short-term range, which is why I'm standing on the sidelines for now. The first trade that I placed today was a hit. My goal is always to find a chance where there's real profit to be made. I'm generally always trying to take between 10 and 15 points with me. That's the first thing, and the second is that my stop is relatively close behind. So for the entry, I have to have a minimum chance of 1-to-1 beforehand. Better would be 1-to-2 to my stop. But very quickly following the entry, if I have the chance, simply to take out the risk. Generally, I don't just do one trade, but let's say between 10 and 20 trades in my trading session, which is why I'm thoroughly convinced, as I see how the market is developing right now, that today we'll have a few more chances. That was it. Thanks. Wonderful, Jörg. Thank you very much again. And now we haven't heard anything from Ollie yet. Oliver, do you have anything? If not, then I would suggest that we switch over to CME Saul live once more. He has something to say and he's connected to us.
Please tell us what you're doing.
All right. So we had a little movement this morning, and just let me give you a little review here as to what we were doing. We had, this is our pivot right here down at 47. We had this little rotation early, right before we opened up here to the 44.5, which we had a little entry point, and then we had a little sale here. Our level that I gave you was at 50. We made a move right up to 50, and then came off very nicely. So we're looking to take advantage of our levels like I've given you. Our next level above would be up here at 55.5. Actually 54.5, which actually, I'm sorry, I'm getting my times mixed up. It actually did go right up to the 54.5. Our level up there that I gave you when the market opened up before we started, just right after we started trading, was at 55. And the market did go right up to that 54.5. Remember I said we wanted to sandwich in the trade there. You want to sandwich it in with the half a tick above and half a tick below the level, so that we can make sure we can get into the trade. And so we did have a little bit of a short right up against that resistance level there at 55, there at 54.5, and I think it was thin enough and light enough where I think we could have been able to get our trade, and if you had put the orders in, and then made a nice little rotation. We could have had a trailing stop, which means just put the trade in, put a couple of contracts in, take one contract off, with a 2-point profit, and then try to see if we can't rotate and make the move down to the 47, which we ended up doing. A little bit of a buy there. You could have bought it there and went down to 45.5 and then made the move back up here to 50. Again, we're looking for scalping opportunities in the market, and we've gotten that with the way that the markets are rotating back and forth here. We're taking advantage of ebbs and flows. Now, somebody remarked that the markets are moving due to, there are obviously other markets that we have to watch when the markets are trading, and one of them is oil. Lately, the market has been trading in lockstep with the oil markets, and we have to stay focused in with other markets to make sure that when one takes off, and especially when they're interrelated, that you understand which markets are interrelated, which markets are going to affect the market that you're trading. Right now, the oil market definitely is the market that's affecting equity markets, and yesterday's trade was completely reversal due to the fact that oil also reversed from the highs down to the lows. Very, very thin, but you have to make sure you understand what's moving your markets. And since we focus in on one market, we also look at the bond market as well. But we also look at the bond market to give us some indication sometimes where the S&Ps might be going. You do have a correlation there, sometimes inverse, sometimes the same way, especially with what the Fed is trying to do or not do these days in America. So yesterday, when the equities broke, the bond market it gave a little bit of a strong rally to the bond market, and so yesterday the rotation was simply the S&P's breaking, the bonds rallying. So one question that I have here, how do you decide which one to trade? Well, one of the questions is, you got all the levels, but how do you decide which ones to trade? Well, we're looking at 4 or 5 trades in the course of a day, and depending on volatility, and yesterday we had volatility, we don't know that we're going to trade 5, 6, or 7, or even 2 or 3, depending on what day we're having. So our levels are out there. I put our levels out there. I don't know whether we're going to hit all our levels or not, but all our levels are tradable. We're not objective here. We don't try to pick and choose which levels are more important than the others. I will say that if you're a little bit risk averse, that maybe you don't trade initially at the beginning, because the markets do get a little bit fluid the first 10 to 15 minutes. But after that, the markets do kind of seem to trade off of good support and resistance levels. So all our levels that we give out, I try to make sure that we are solid in what we do, and solid support and resistance levels. All our levels are tradable, basically. I'm not trying to pick and choose. We can't try to pick and choose, then we'll be guessing as to which trade is good or bad. And again, we're not trying to guess. All we're trying to do is take advantage of ebbs and flows in the market, and it's the last thing we're trying to do is to be able to choose which ones are good or bad. I'm not going to give you levels that don't work, basically, is what I'm trying to say. And of course, not all of them work. It's just like every other indicator. Not every indicator works. Sometimes a lot of algorithms are out there that make markets do crazy things. Lately, that's been going on more than anything. Ever since computerized trading came into play, algorithms have ruled the roost here, and they've been making market volatility and market movements without any logical explanation, and that's been going on for you know, for the last few years, as you can see with HFTs and everything like that. So anyway, but again, all our levels are tradable, and what we do, and if you're interested in what we do and want to communicate with us, pitiq.tv is where you can register and listen to the stuff that we do on an everyday basis. I have a trading room and stuff, and we do it off the floor here, so we get that. You get that interaction with some of the traders and you know, some of our traders as well. So, all right, I just gave you a little bit of a review. As you can see, it went down to the 44 level again and bounced off. The 44 level on the downside is our first support level. Yeah, again, if you did buy first time is good. The second time is a little bit more risky, but they did rotate off of that. Again, we have all kinds of traders. I got traders who are trading in the pit who are listening to me. They like to take more trades because their cost of doing business is a lot less. While I have a lot of retail customers who also are trading, you know, who are looking to look for about 4 or 5 trades. And everybody has different risk tolerances, and what we try to do is I work with everybody to try to figure out where your risk tolerances are and what kind of trading program we should give, let everybody trade. All right, back to you, I think, if anybody has anything. I'll give you another recap in a few 15 or 20 minutes. Market seems to be bouncing off those lows again, pushing back up. I would say the 50 level again, because we already touched it once, is a little bit more risky. Anytime you touch a level one time, the second time becomes a little bit invalid or a little bit more riskier to trade. That's all I'm saying. So some of our traders trade them all the time, back and forth. We, you know, for the methodology that we're trying to teach, we're taking our time. We take one trade at a time and basically wait for our next level to get triggered before we try to put on another trade. And what we try to do is stay out of the back and forth like we're getting right now, because right now the back and forth doesn't give us too much opportunity. All it's going to do is you're getting chopped up in this kind of market right now, so we try to stay out of that kind of trade.
Okay, wonderful so far. So let's just switch to Martin. He has an order.
Okay, can you hear me?
Okay, yeah, now we can hear you. We are really clear, so go ahead, please.
Okay, wonderful. So this trade fired off. Listen, this is a counter trend trade, okay? And one of the things that we do is we talk about, if I can find my arrow here, we talk about the idea of market structure. Got it? So the market put in a low, the market has now put in a high, and then we came down for another low. And so the question is, if we move above this high, okay, it's market structure, right? A low, high, higher low. Breaking this is a form of breaking resistance, and then we expect that the run is going to start moving up to retest the overnight high and perhaps the pivot. You can see there's just not much going on. They get this thing excited, but there's just not much going on, okay? So anyway, this is just another trade. It's based on market structure. Now, what about my indicator? Okay, just a minute. This is a commodity channel index. We would say something like this. Oh, that's an arrow. Okay, and there is our buy signal. Got it? Now listen, if you are a trend trader, you're not doing one thing, right? If you're a trend trader, you're saying, well, I want to wait a minute. But if you're a counter trend trader and you know anything about the market structure, and then you see that you got a signal off the indicator right here, commodity channel index. Okay, now I didn't invent this. This is a common indicator in your package, okay? As long as we have trend and momentum, you're going to be okay. I do have no-go rules. And the no-go rule is if we're trading in a range of $200 or less, we really should not be trading, okay? We really should not be trading. All right, so looks like we are seeing good things happen. We expect we're going to have a run up to the overnight high as a retest, and maybe the pivot. I never, ever, ever think about the trade of the century. I never get that emotionally involved to where I think, oh my goodness, this one's going to go to the moon. Never. All right, so if you want to check back with me, you can check back with me if someone else has a trade.
Yeah.
Here, of course, he was looking at a counter-trend strategy. He just reached his target. Wonderful, congratulations on this. Thank you. He made a great trade here that was based on the market structure, so to say. So he was looking at where the lows and the highs were, growing lows and growing highs. So this is the typical classic style, and he did the whole thing with the classic CCI. So he used the Commodity Channel Index, which is a normal indicator. As he said, he didn't invent it. He simply used it here. And as you saw yourself, unfortunately I can't show it here quite as nicely as he did, but you were able to see a little bit of what it was about. I've just seen that Marcus has something. Let's go over to him quickly first. If you want to, you can briefly say something, Marcus. Wonderful. I have something right now. You can see it in my list. Here you can see my trading list, which I have 5 of. 1 for the daily chart, then for the hourly chart, for the 15 minutes, as well as 5 minutes, and 1 minute. So yes, 5 units. And at the moment I have trades running in the 5 minutes and in the 15 minutes. Just for a brief overview, it's always the same system according to the good old Dow theory. Based on the larger time frame, the hour is always my superior trend, my primary trend. And according to the Dow theory, it has to be going in my direction, then I have the biggest chances of my trade working out, since it's always about as many market participants as possible going in the same direction as the one I'm going in. So we have the Australian dollar, Canadian dollar, and it's going in my direction. AgenaTrader, with my own package, the Dowhow package as it's called, automates the whole strategy and automatically shows me the last correction zone. As you can see down here, the trend is shown and the trade is automatically managed by AgenaTrader. So this means that I don't have to do anything. The next trade too, Australian dollar, New Zealand dollar, was also a very clear short candidate in my direction. Why? Because once again the superior trend is going in my direction, not only the middle but also the smaller trend. And precisely this is the picture that I want to have. And the trend that I want to trade was also going in my direction at the time of my entry. Obviously not every single trade can be successful. That would be a dream, but the stock exchange isn't there to fulfill our special requests. So a third trade is running in the Canadian dollar to the Japanese yen. Here too, I was also stopped and the market was going in my direction. Here again we had the same picture. The superior trends have to be moving in my direction. And then I have a large chance of the trade actually working out. The nice thing about this is that up here I have my initial risk with 1%. This is the maximum I'm prepared to lose if the trade doesn't go in my direction. But in day trading it's absolutely important to take the risk out of the market as quickly as possible. And this is what AgenaTrader does for me with the so-called soft stop. This is an invention which, and I want to emphasize that this is a fact, not just a claim, is only available in AgenaTrader. And this soft stop makes sure that I'm taken out of the market with little risk. This means, of course, that if a signal, the red arrows here indicate the signals, if a signal comes again later, then I make another entry, a re-entry. I also have oil running short at the moment. The red arrows are each showing where my signal showed up. again based on the primary trend, which is also completely valid. And both trend sizes that are important are going in my direction. And then my signal also appears here. My initial risk was up here again in the superior trend, and the soft stop is trailing behind the small trend again here, all automated. And this is professional stock market trading. There's nothing more that I need to do. My only task that I have with my trading approach is simply to decide when a signal comes, is it okay? Does it fit into the big picture? And then all I have to do is click on the trigger on the entry button, and AgenaTrader does the rest. And the S&P 500, which I introduced before, is now moving against me, which means that right now the Americans seem to be pulling the market upwards. Okay, and since my trend still has the same trend size, my stop also remains up there. And in the worst case, I will then be taken out of the market up there with my calculated risk. And one last current trade is running in the 15 minutes, US dollar, Canadian dollar in the long direction. And here again, it's exactly the same game. The hourly chart has an upwards oriented trend, is going in my direction, which means that the larger capital is also going in my direction. And the market participants that are present in this trend size are trading the same direction as I am in my 15-minute chart, which is why my signal shows up. And currently the trade is ever so slightly positive. So these are my trades, which I have running at the moment. We will see how they develop throughout the course of the day. I don't have any more signals than that at the moment. And in the 1 minute chart, I now also have a signal, which I can show you now. Where does it come from? Here again is the exact same picture. Both superior trends are going in my direction. Here my signal appears, and amazingly, I just have to click once, and my order is immediately in the market, and I simply need to trigger it. My stop is automatically calculated here with relevance to the last high point. My targets are also immediately placed in here, and my target is down here at this small point 2. That's where I want to get to. And that's enough for me. This is 1 minute of filet trading, as I like to call it. Top quality filet trading. And I couldn't even ask for more here. That's the trade I'll enter now. Maybe it will also be triggered. We'll see. That's all. Back to you. Thank you, Marcus. That was very interesting. Also very interesting because we saw that, of course, the trading platform is a very significant tool that we traders should be using to make our work easier and nicer. I'm going to switch back to Jörg again, and perhaps I could also show you something I've got going on, but I'll go over to Jörg. You're up. Great. Marcus was just talking about his setups, and I'm also one of his boys who uses this setup. For example, here I've found a trade in the Canadian dollar Japanese yen. And here we have the classic situation too. So I don't only operate in the extremely short term, where I try to just take a movement of 10 points with me, but I also equally enjoy trading the Dow theory and everything associated with it. And I found this trade. We'll let it run for a while here. Here are all the images that we have. In the bottom right, the hour. And here too in 10 minutes, we have a beautiful downtrend, which is deep in the correction zone. And we'll see in just a minute whether this down here was a double low in the 10 minutes. So I'm in here with a very, very long position because this, for example, is a trade that I wouldn't constantly follow, but here I let AgenaTrader trail the soft stop behind, My targets are in there. I'll let it run, and I'm looking forward to Daniel's presentation now.